everyone. Welcome to today's topic, which is taxes as a massage therapist in Michigan. Now, we're going to be talking about both self-employed and employed taxes. All right, so the first ones that we are going to dive into is self-employed taxes, right? A lot of people want to do mobile massage, be an independent contractor, do things out on their own. So these are forms that we need to worry about and for sure fill out that we may not have seen before in previous positions as an employee. All right, so the first one to worry about is the Schedule C. This is Form 1040. This is not to be confused with Form 1040. That's your individual income tax return. The Schedule C is really important. It's the profit or loss from your business if you are a sole proprietor. All right. Now, this is going to have your information about your business. It's going to have your gross income, your receipts, your sales, all the money that has come in. But then you're also going to add in the cost of goods sold. You are going to talk about all of your deductible expenses, things that you did that are allowed to be taken out of your total income. Like, did you pay for continuing education? What were your overhead costs, the cost of equipment like tables, linens, lotions, those types of things. Anything that is allowable as an expense to deduct from your income, you will put on here because this form is going to allow you to calculate either your net profit or your net loss that will transfer over to your 1040, which is your individual income tax return. Now, the 1040 you might already be familiar with as an employee. This is your individual income tax return. This is where your name, your demographic information goes. If you're single, if you're married, filing joint or separate, out of household, qualifying surviving spouse, those type of things. Do you have any dependents? This is also where you're going to decide if you're taking the standard deduction or not. Now, I highly recommend, especially if this is your first year doing self-employment taxes, to definitely get a qualified tax preparer to help you out, whether that is an individual or you go with a large franchise like H&R Block or TurboTax. Please get help for at the very least your first year to make sure that you are selecting not only the correct deduction, but also filling out the income portions correctly. You don't want to miss any of those deductible expenses that can be taken out of your income and therefore lowering the income that you pay taxes on. All right. Save yourself some money in the long run by making sure that you have qualified help transferring over all of the income data to this form. All right, we also have the Schedule SE. This is another Form 1040. This is the self-employment tax. Now, this calculates your Social Security and Medicare taxes. Combined, they are 15.3% on your net earnings, okay? Medicare, I believe, is 2.9% of that 15.3. You are going to calculate this, and this will be filed with your Form 1040, your individual tax. You may also be filling out something called the 1040 ES, which is the estimated tax payments if applicable. All right. You usually will file this quarterly. These are estimated taxes if you expect to owe $1,000 or more in taxes for the year. They want you to pay that quarterly instead of annually. All right, we're going to talk about when you would file these momentarily. Just know that quarterly is every 3 months. Starting on January 15th, you would be filing these to make estimated quarterly tax payments in. Now, this one's a really cool one that isn't talked about very often, and I'm not sure why. It's Form 8829. This is expenses for business use of your home. So if you have a home that is also deemed commercial, and you use part of it as your massage office, all right, you can use a portion of that house and actually use a deductible expense as a portion of your rent or your mortgage, as well as your utilities for the space and percentages used up to a certain amount. This form will help you calculate what those expenses are for that business use of your home to then also be filed with your Schedule C and 1040. All right, now those are your federal forms, but guess what? You also get to pay income tax in Michigan as a state. Now, not all states require you to pay income tax. I was previously a massage therapist in the state of Florida. Florida at that time did not charge a state income tax, but in Michigan, we get to. So, what are the Michigan state forms? This is the MI 1040. This is the Michigan individual income tax return. So your state income tax is at least easy to calculate because it is a flat rate of 4.25%, all right? There is also a 6% corporate income tax rate, but we're not worried about corporate rates right now. We're not talking about LLCs or corporations. We're only worried about self-employed, sole proprietorship, or if you're operating as like an independent contractor. So your rate is going to be 4.25%. All right, now the Michigan tax forms also has a 1040 ES. This is your estimated tax payments that you should be sending in quarterly, but this is different than the federal ones. The federal ones want you to pay quarterly if you're expecting to pay 1,000 or more in income tax, whereas Michigan wants you to send them in if you are expected to owe $500 or more in state taxes. So half of the amount that the Fed allows you to estimate on there. So please make sure that if this is something that you believe you need to be doing, you are sending these in quarterly rather than annually when you prepare all of your taxes for the year. Right, guys, I just also want to mention if you are in a metropolitan area, there are some Michigan cities that impose local income taxes for the city area. You need to check with your city for the forms. I know that when I file with TurboTax, this is not a paid advertisement. I just happen to like TurboTax for ease of use for me. However, I do know that when I file my Michigan state income taxes with them, there's at least 8 different cities that it asks you about to make sure that you are not operating your business in those locales, because that will be an additional income tax bracket that you need to be aware of. So please double check where you are and if there are local income taxes in addition to the state and federal taxes. All right, guys, there are also business registration and sales taxes. All right, if you sell products like oils and lotions, you would need to collect and remit Michigan sales tax, which is 6%. There is also information about massage being taxable despite being a service in the state of Michigan and subject to a 6% sales tax in some cases. All right, you need to register with the Michigan Department of Treasury. It is free to do so. It is free to get your sales license for this, but you also will potentially need to file Form 160, and this is your sales use and withholding taxes form. All right, please be aware if you are doing sales through your business, this is an additional form that you will need to fill out. Now, registration is a little bit different than a tax, but it is an annual fee that you are potentially going to have to pay. So in addition to the federal tax, the state tax, and the city tax, there may be a local business tax to your municipality. In addition to that, you may need to acquire a city business license above and beyond anything that you need to fill out, form, or file with the state. All right, so please be aware. Here's an example for Farmington Hills. The initial fee is $300, and there is a renewal fee of $200 every year to operate as a massage therapy business in the area of Farmington Hills. All right, everyone. There is also other forms to consider. Um, one of them is if your client sends you this one. This one's pretty interesting. If they have paid you $600 or more for the year as your client, they might send you a 1099 NEC. All right. You could also receive a 1099 miscellaneous MISC. You might receive a 1099K if you did anything for side income, like if you were working for a place like Upwork or something, maybe designing or selling courses or classes or something on massage therapy or aromatherapy, that type of thing. These are all various forms of 1099s that you will potentially have to report on your Schedule C as income as well. These allow those people or companies to notate that they spent this money out in wages. So please be aware that they are filing with their taxes that they have spent this money in some type of wage or payment out to you. So it is already being reported to the state as well as to the federal level that you have been working for them and have received more than $600. So now you are also required to file this income on your taxes. Now, please remember 100% of what you earn is reportable as income. All right. If you've bartered for a goat or drywall work, or if you received a lot of tips, tips are also 100% reportable. Any income that you make needs to be reported. And if you have clients that have paid you more than $600, they may actually be sending you something like this 1099 NEC. This you could deduct out of your total. So if you had 10 clients that all paid you more than $600 and you just totaled all of those 10 together to report as your income, and then one of those 10 clients sent you this form, the 1099 NEC, something extremely important for yourself to keep in mind is to then remove this amount from the total that you had compiled together so that now you have 9 of your clients in a lump sum, and now you have this 10th client set aside reporting this income on this 1099 NEC rather than on your Schedule C in this lump sum, because you don't want to double report this income from this singular client sending this in. I hope that makes sense. You definitely don't want to be taxed on the same amount of income twice. Always keep your receipts of everything that you buy, vinyl gloves, lotions, equipment, your computer, if you're paying utility bills, internet for your office, commercial phone, commercial vehicle use if you're doing mobile massage, your mileage if you're constantly going places, continuing education, your insurance, all right? Your insurance is mandatory, but also luckily deductible. So please keep a list of your deductions. Keep them organized. Keep your receipts. Absolutely. All right, so you've compiled all of your tax forms. Now what do? Your federal and your state taxes are due on April 15th. If that falls on a weekend, they are going to be due the next business day. All right, so remember we talked about these 1040 ES, these estimated tax forms, both federal and state. Now remember, if it's federal, they want you to file if you are going to potentially owe $1,000 or more in taxes. State of Michigan expects you to file them quarterly if you're going to potentially owe them $500 or more in taxes, and they are to be filed April 15th with your regular taxes, June 15th, September 15th, and January 15th of the next year. Now, if you look on this little chart, this is the time period that you earn the money, and this is the day that the taxes are due on. Please pay special attention to these because some of them run up pretty quickly on each other. You basically have 2 weeks to file. All right. Again, recommended next steps. We already talked about using a tax preparation service of some sort, a tax professional, a CPA, to make sure you're getting all those deductions that you are eligible for, but also that you are in compliance. You are legal, you're getting all the money that you deserve. You can also check out the Michigan.gov Treasury and make sure you are tracking that income and expenses. You can use a program like QuickBooks. I personally just use an Excel spreadsheet usually. I'm a huge fan of keeping spreadsheets myself, but use whatever is good for you. I believe you can also import these things directly into tax preparation services like TurboTax. So please be aware these services are out there and they will help you. All right, everyone. So let's assume, as a self-employed massage therapist in Michigan, that you have made $60,000 gross profit, gross income. All right. Now, what you're going to do is you're going to take your business expenses and subtract it from that total income. Gross income is all that income that you have received from all of your various retail, services, side work. Now you're going to take your expenses and subtract that from that grand total. And what you're going to end up with is your net profit, which is also your taxable income. All right. So we're going to take this big total, this gross income that you originally made, this $60,000, and then we're going to start removing the cost of expenses from it, because you didn't just pay yourself $60,000. You also paid a little bit for equipment. You paid some for insurance. You paid some for utilities. All right. So what are those deductible expenses that we can do? Like we talked about earlier, these can be massage supplies, it can be equipment, insurance, licensing, education, some marketing, website costs, bank fees, bookkeeping software. If you want to pay for something like QuickBooks, you can deduct that. Professional association fees, all right, like if you're a member of AMTA or ABMP, something like that. Also, if you work from home, if you have a home office, you can also do that deduction. You can deduct a portion of your rent or mortgage. So if you use 10% of your house, you can deduct 10% of your mortgage from your income. Utilities, home insurance, and property taxes, you need to proportion that to the amount of the space that you are using for your business, but you can do that. There's also the simplified home office deduction that you can file, and this is worth $5 per square foot. I believe this is up to 300 square feet or $1,500 maximum, if I'm not wrong with that. But let's just say that you have a 100 square foot area that you use a 10 by 10 room. That's a $500 deduction that you can pull off of that income. So taking all of this, let's just say that your total estimated business expenses for this year were $5,800. So what does that look like? All right, so we're going to find our adjusted net profit. Okay, this is our taxable income by taking our gross income that was $60,000, and then we're going to minus our expenses, which is $5,800. So now our net profit, our taxable income, is going to be $54,200. Now, this money I have over here, each one is each bill is $1,000. All right, and now so we're going to cross off some of these. We're going to start ticking them down. We have self-employment taxes, all right, 15.3%. Social Security is 12.4% of that, and Medicare is 2.9%. So that is that 15.3% that we were talking about earlier on, all right? This is taxed on 92.35% of your net profit. All right, you can deduct half of this, which would be $3,829 from your income tax. All right. Now, what is your federal income tax? Federal income tax rate. We do have a standard deduction. If you were filing in 2025 for 2024, that would have been $14,600. Most people aren't going to go over that in terms of deductions unless you have some serious things that you are purchasing. So please be aware this may be the best, but again, please talk to a tax professional to help you out with that because I am not. All right. Taxable income, you've got your 54,200. You are going to take out half of that self-employment tax rate. All right. So now we are getting down to 35,771 because we have also taken out this standard deduction, all right, for a single filer, which is at 14,600. So right now, our income that we are going to get taxed on at the federal level is going to be $35,771 versus the 60,000 that we started out with. Now, tax brackets, you need to pay 10% on your first $11,600. So you're going to be charged $1,160 for that 10% charge, and then it's a 12% charge on the next $24,171, which is $2,901. So your estimated federal income tax that you'll need to be paying is going to be $4,061. Okay, so this is going to be what you need to pay to the federal government, starting from that 60,000, taking out your expenses, taking out your deductions in there. This is what you end up with. Now, you also need to pay Michigan state taxes. Now, remember, this is a nice flat tax of 4.25%. So you are going to be paying a total of $2,304. And we come to that because we are taking it from your net profit. All right. We can still do deductible expenses for the state of Michigan. That leaves us with that $54,200. And that is what we are rating the state taxes on. All right, so what are our total estimated taxes due? Remember, this is for self-employment. It's going to look like our self-employment tax is going to be about $7,600. Our federal income tax is going to be that $4,061. Michigan state taxes at $2,300. So our estimated total taxes that we're going to be paying out is $14,000. All right, this is about 23% or 23.4% of your income before any deductions were taken out. Now, after-tax income, let's talk about this. Your gross income was 60,000. We took away our expenses. We took away the total taxes. Our after-tax income after we've paid everything out is $40,000 thereabouts. If you were to pay $5,000, and I'm using this amount because that's what we're going to use in the employed section in just a moment. If you paid $5,000 towards your health and retirement, all right, your contributions for that are health insurance. If you only paid $5,000 for the year, you would be making $35,000 worth of income out of $60,000 for the year. All right. You need to deduct again all your legitimate business expenses to lower your taxable income, to lower the amount of taxes that you need to pay. Self-employment tax, 15.3% is the biggest hit, but at least you can deduct half of that from your total income. Now, Michigan's flat tax is relatively low compared to other states, but again, there's other states that don't even charge income tax. All right. Now, if you do contribute to retirement accounts that are allowable, this will come out to reduce your taxable income. These are contributions that are made before they count your taxable income. So this is something to keep in mind. Another thing that I did not calculate in here is, remember, you probably have, if you're in a metropolitan area, not only business tax, business registration fees, but also those local city taxes as well, especially if you live in an area like Detroit or Grand Rapids. Okay, take a big deep breath. We're out of self-employment. Now we're going to talk about being an employee. All right, one of the first things that we're going to have to fill out in terms of federal tax forms is Actually, you don't fill this one out, you just receive it. And this is going to be your Form W-2. This is provided by your employer. You will need to fill out information for them to be able to send this to you. But this reports your wages. This withholds your taxes for you, your FICA, all right, federal, state, and FICA, and pre-tax deductions. Like if you are paying into your health insurance or 401k, they do all of that for you through their payroll service, which is really nice. All right. You should get it by January 31st from your employer. If you do not have it by the 31st, you do need to contact them to find out where it could potentially be. And you use it to fill out your Form 1040. All right. As an employed massage therapist, your 1040, your individual income tax return, is ridiculously easy. You're going to fill in the income from your W-2. You're going to fill in the federal tax that was withheld, and you're going to do your deductions. Now, this could include things like student loan interest or IRA contributions, but if they don't override or are not higher than the standard deduction, then you're going to just stick with that standard deduction usually. Again, see a tax professional for all of this, but it makes filling out your 1040 ridiculously easy when you only have this W-2 to put in there. Now, there is also what's called a Schedule 1, but this is pretty rare. You can report things like side gig income, like if you freelance outside of your job. But again, if we're just talking about a straight employee situation, that's your only job, this doesn't apply to you. You could have things like educator expenses. This is unlikely for massage therapists unless you are doing something on the side, like teaching. Then this is something that you could potentially be utilizing as well. Schedule A is your itemized deductions. This is super rare. Usually the standard deduction is going to be the way to go. It's usually higher than what all of these itemized deductions are. But again, use a tax preparer to help you out with this because that is not me. All right, so we talked about federal income tax as an employee. Now let's talk about state income tax. So again, you've got the MI 1040, which is the Michigan Individual Tax Income Return. These are your wages listed straight off your W-2. Again, super easy. However, in this particular case, you are going to be filling out the Michigan tax withheld, the state tax withheld, not the federal tax that was withheld. Now, there are other forms that you can file, like there's the 1098 for mortgage interest, but is your mortgage interest that you're paying honestly higher than the standard deduction? Probably not. So you're only going to use that if you're itemizing deductions. Here we've got an example of the 1099 NEC again. This is only if you have side income, okay? You're going to have to report all of that. We're going back to those self-employment income forms like Schedule C and SE taxes. All right, there's also the 8863. Now, the 8863 is going to be for education credits, like if you paid for massage therapy school or continuing education. You can also claim the lifetime learning credit. All right, just letting you know that is out there. Please talk to a tax professional. Also, these rules and amounts change every year. All right. What you can't deduct as a W-2 employee is home office expenses unless they're required by an employer and unreimbursed, which is like almost unheard of. Massage supplies, uniforms, unless the employer does not reimburse you for them and they are required for the job, then you can deduct those. Mileage and transportation cannot be deducted as a W-2 employee unless you're driving between work locations, not commuting, just to and from your normal office. That being said, a lot of employers do pay for mileage, so then you can't deduct it anyway because you're already getting paid for it. All right. That being stated, what is the difference? What is tax going to look like now as an employee? Okay, so now you've made $60,000, all right, but you're an employee, not self-employed. So As an employee, your employer is withholding your taxes from your paycheck already. So you might have some deductions, but way less, probably none, honestly. There are some pre-tax deductions, pre-tax benefits that reduce your taxable income. Those are things like your health insurance premiums, retirement contributions, if you have a health savings account. Um, so we're going to look at if we had paid 5,000, which was our example before, we're going to look at our AGI. What is our AGI? That's our adjusted gross income. So now we're going to take our gross income, which is $60,000, and then we're going to take away these health insurance costs or retirement costs that we've paid towards, and this adjusts our gross income, our AGI, down to 55,000. All right. So now we have to do our federal income tax. Let's do the standard deduction to make life easy. So we take 14,600, which was last year's rate, and we apply it against the 55,000. So now our net income that we're looking at is $40,400 that we are going to be taxed against. All right. Now, the tax bracket again is 10% on the first 11,600 and 12% for the next 28,800. So we can expect to pay $4,616 in federal income tax. All right. If we had no pre-tax deductions, if we opted against retirement and health insurance, then our taxable income is going to be $45,400, and we would spend an additional 500 plus paying taxes. So if we didn't do that adjusted AGI, right, our adjusted gross income, we would be paying $5,000, nearly $200 in federal income tax versus that 4,600. All right, so the next step is going to be the FICA taxes. And the cool thing about this, and I'll say this is one of the benefits of working for an employer as a massage therapist rather than being self-employed, is that instead of that 15.3%, now we're only looking at 7.65% because you pay half and your employer has to pay half of those. So Social Security now is only 6.2%. All right. So this math, don't let your eyes cross. This math is a little incorrect on this slide. It should say 60,000 times 0.062, not 6.2. That is 6.2%. The percent sign is not there, equaling $3,720. And Medicare is only 1.45% rather than 2.9%. So we're going to multiply 60,000 times 1.45%, which would be $870, not 5,870. This whole slide looks like it's tired of taxes already, but the total FICA is correct at $4,590. All right. So again, unlike self-employed individuals where you're paying the whole 15.3% by yourself, you only pay half. Your employer pays the other 7.65%, which is an awesome cut. All right. Michigan state taxes remain the same, 4.25%, based on that AGI. Remember, our adjusted gross income, because we spent $5,000 on retirement and pre-tax penalty. Our health insurance was all paid in, so that is only going to be $2,300 that gets paid into the state. If you don't pay that $5,000 in, you're going to end up paying a little over $2,500. It's only a $200 difference, not nearly as steep as the federal tax income, but it does help you a little bit at the end of the year. Now, your total estimated taxes due. The federal income tax is going to be with pre-tax deductions. All right, this is with the 5,000 you pay towards health insurance. All right, and your retirement is going to be 4,600 for federal income, 4,600 again for FICA. Michigan State around 2,300, so you're looking at 11,500 thereabouts. If you paid no deductions going in, no pre-tax deductions, you're looking at 12,300. So you're looking at an increase of about $800. So this can be between 19 and 21% of your $60,000 income if you're not counting those pre-tax benefits. So what does your after-tax income for the year look like? So if you did your gross income and you did spend $5,000 on pre-tax deductions like health and 401k, you're looking at making about 43,400, 500. If you didn't pay into your health insurance and retirement, you're looking at making about $47,700. Um, so you do reduce taxes, but you also reduce take-home pay if you are paying into that health insurance and retirement, but you're going to want that retirement for later. So just to reiterate, there are limited deductions for W-2 employees. All right. You can't deduct home office expenses unless it's like really rare. Mileage, not usually. You could qualify for licensing or continuing education costs if your job does not reimburse you for those. So you could be putting in for your state Michigan massage therapy license. You can be putting in for your required continuing education that you need to take to maintain that license as well. Again, there's a lower tax burden than if you're self-employed. So instead of that 15.3 self-employment tax, you're looking at 7.56 FICA tax. You can also get pre-tax benefits as well as like the health insurance, 401k, that reduces your taxable income, although arguably you can do that self-employed as well. And the Michigan's 4.25% flat tax. Ours is nice and low. There are several that are higher, but there are several that charge none at all. So please keep that in mind. If you get licensed in Michigan and want to move elsewhere, please pay attention to that. If you do live in Michigan and stay employed in Michigan, please remember if you switch to self-employment, depending on what area you decide to open your office in, you might be required to pay city taxes on top of state and federal taxes. All right, guys, that was my overview. I hope it was informative. If you have any questions, I can definitely try to help you. But as I said, please talk to a tax professional for sure, especially for your first year filing as a massage therapist. All right, I'll see you guys on the next one.